California's economy is expanding by an estimated 6% from 2024, growing faster than it has in US, China, and Germany. California is now the fourth largest economy in the world. And this is normal GDP terms. California has now surpassed Japan and ranks as the fourth largest economy. The growth is especially driven by some familiar engines: healthcare, education, government sectors, which showed solid gains last year.
Welcome to Local Living Tri-City, your go-to podcast for exploring the vibrant communities of Temecula, Murrieta, and Menifee. Join me, Liz Jones, as we dive into real estate insights and local business stories, bringing you closer to the heart of our Tri-City area. Let's get started with today's episode.
Hey friends, welcome back to Local Living, where we talk all things community, real estate, and life in the Inland Valley. I'm your host, Liz Jones, and today I'm bringing you the economic update with some eye-opening takeaways from a recent Southwest Regional Economic Forecast. And it was hosted by the Temecula Valley Chamber of Commerce this last month, and the report was led by Dr. Robert Kleon. He's the principal economist with Kleinhurst Economics. So he reviewed the key data for U.S., California, and right here in Riverside County. And it included the Temecula, Murrieta, and Menifee surrounding areas. So let's talk about that for a minute here. I'm going to start the episode with the big picture, which is our U.S. economy. So if I had to sum it up in one current mood, just one word, I think it would be uncertainty. Yeah, consumers are still spending, and yes, business investment is surprisingly strong, but it is also fragile confidence. It's being tested by a mix of global and domestic issues, from trade tensions, tariffs, shifting in immigration policies, and unpredictable government moves. So, despite all this, the labor market has held its own. So, in fact, job growth is outperforming the long-run average. This is just past June. We saw 147,000 new jobs added, more than expected, and the unemployment rate dropped to 4.1%, the lowest it's been since February. Most of the growth came from healthcare, education, and government sectors. And here's an encouraging note. Wage growth is steady, about 3.7% year over year. Not runaway, but still meaningful. Now, let's talk inflation. After the headlines and grocery store sticker shocks of all the last few years, we finally are seeing things stabilize. The Fed's preferred inflationary measures, known as PCE, which is holding around 2.4%. And this is right in line with their target. So, does that mean the Feds will cut rates soon? Maybe, but not right now. They're taking a slow and steady approach, especially since we're still seeing inflation pressures in certain sectors. As of July, the federal funds rate remains between 4.25 and 4.5, and many economists expect it to stay there through the end of the year. Now, for all the buyers and sellers out there, let's talk interest rates. So the 30-year mortgage rate has eased slightly. In early July, it dropped to 6.67, down just a bit from 6.77 a few weeks prior. Still, that's more than 2 full percentage points above what we saw just a few short years ago. And it's changing the landscape for affordability, especially here in California. So, and finally, what about the stock market? Okay, well, it's been bumpy. The S&P 500 and the NASDAQ both reached all-time highs recently, but not because the economy is on fire. Rather, optimism around possible rate cuts and a big wave of investments in AI and infrastructure is giving investors something to cheer about. That said, markets are still sensitive to every bit of policy news, global tension that pops up in the headlines. So here's the takeaway. The U.S. economy, it's resilient. but very cautious. Job growth is solid and inflation is under control and consumer spending hasn't fallen off a cliff. But high interest rates and policy uncertainty are keeping everyone just a little bit on edge. So, all right, let's zoom in as we shift our focus to California. So right now, the job market here is a bit sluggish as it's inching forward. So the state unemployment rate sits at 5.3% after a slight uptick from earlier this year. That means just 1 in 20 Californians is still actively seeking work. And that's higher than the national average of approximately 4.2%. On the jobs front, while California has added roughly 17,700 jobs, non-farm payroll jobs in April alone, overall jobs growth remains far below the levels that we'd like, hovering right around 0.5% annually. Now, here's the fascinating contrast. Despite tepid hiring numbers, California's economy is expanding by an estimated 6% from 2024, growing faster than it has in U.S., China, and Germany. California is now the 4th largest economy in the world. And this is normal GDP terms. California has now surpassed Japan and ranks as the 4th largest economy. The growth is especially driven by some familiar engines: healthcare, education, government sectors, which showed solid gains last year. However, traditionally dominant players like tech and entertainment and retail are all cooling off compared to 23, making room for a more diversified base. And that said, long-term challenges in California remain significant. Housing affordability continues to sprawl out and reach. Median home values hover well around $800,000 statewide. And in coastal markets like San Francisco, San Diego, you're looking at $900,000 or upward. Now, that's fueling many for California exodus. So think about that. They're looking for lower cost of living. Despite that, state population is actually leveling off around 39 to 40 million residents lifted by immigration, even as internal immigration cools. Yet in the midst of all this, California keeps flexing its strength. Our tech sector alone generates $623 billion annually, nearly 20% of the state's total 78% of Fortune 500 companies headquartered here in the Golden State, and it remains to be the premier hub for innovation, venture capital, and creative industries. So what does this mean for all of us here in Southern California, specifically in the Inland Valley? Jobs. We're seeing growth in healthcare, education, but tech-based hiring is much slower. Housing costs are high, yes, but inland communities remain comparably affordable through the whole state. This is still challenging for first-time home buyers. Migration and growth, people are moving inland. Not necessarily out of state yet, which is good news for the local economy and infrastructure planning. So let's bring it home. Let's talk about Riverside County and the Inland Valley. So unemployment here in Temecula and Murrieta, unemployment is around 4.3%, better than many of the cities in California. But Menifee, Wildomar sit closer to 5%. The county overall is at 4.9%. Our job growth, healthcare, and government jobs are growing here, while construction, real estate, and leisure and hospitality are facing headwinds. Murrieta alone saw over 500 new housing permits this year, so they're still forward moving. Population trends, well, Riverside County is one of the few places in California still growing. Our share of the state's population is expected to increase from 15% today to 20% in 2039. That's a silver tsunami. The aging population is real, and it's going to reshape healthcare, housing, and local services. Education and workforce, well, Local communities like Murrieta and Temecula show higher than county average levels for college degrees, which is great for attracting industries and investment. Commuting patterns, well, they're a whole nother story. Over 60% of the workers commute out of the region, which highlights major opportunity and challenges for future economic development. Let's talk real estate because I couldn't have left that out. So sales are down, but our prices are holding strong. In Temecula, the median home price rose 6.91% year over year to $770,000. Murrieta dipped to about $665,000, and Wildomar saw its dramatic 35% drop in sales volume despite a spike in price. Affordability is still tight. Only 20% of the households in Riverside County can afford the median-priced home. To qualify for a $640,000 mortgage, you need to make about $165,000 annually. Inventory is growing. We're seeing a return to those listings coming to market. We're hovering around 4.3 months of unsold inventory, just above the balanced market, but still low enough to create pressure on buyers. Permits are down countywide, especially Menifee, Wildomar, Murrieta, Temecula is pushing forward. So here's our key takeaways. Demand is still here. People want to live in the Inland Valley. The question is, can they afford to? So where do we go from here? The Inland Valley stands at the crossroads. Growth is on our side, but affordability and infrastructure and local job creation are the key to sustainable success long-term. If you are a buyer or an investor, long-term outlook is still strong. And if you're in a city leadership development, this is your moment to think about housing economic policy. So I want to give a huge thanks to Robert Kleon for his work on this regional forecast. If you'd like to dive deeper, feel free to reach out. I'm happy to send you the full presentation from Robert or chat more about what it means for you if you're buying or selling a home or on that journey. This is Liz Jones signing off. And remember, local knowledge is your greatest advantage. Until the next time, friends, take care.
Thank you for listening to Local Living Tri-City. Stay tuned for more insights and stories from Temecula, Murrieta, Menifee, and surrounding areas. Be sure to subscribe, leave a review, and share this episode with a friend that is passionate about the Tri-City area as you are. Goodbye for now, and we'll see you next episode.